afternoon, USBC members, and I want to extend a special welcome to all of the newest folks that are joining us here today. And I also want to say a warm welcome back to the folks that joined us the other day. Now, I'm Philip W. Dunn, the manager of Chamber and Business Engagement for the U.S. Black Chambers, Inc. On behalf of our president, Ron Busby Sr., our board, and our staff, I want to thank you all for attending this very special webinar. Now, we're thrilled to kick off the second session in this Essential Financial Wellness series presented in partnership with the American Consumer Credit Counseling organization. Now, last time we laid the groundwork for strengthening your financial foundation. So today, November 6th, we're moving forward into the essential, actionable strategies, budgeting and credit solutions for small business success. This is going to be a really important webinar, so we're going to encourage you all to really pay attention, take notes, ask the right questions, and let's get you guys moving forward. So we all understand that running a business demands focus, but financial stress from credit card debt, cash flow issues, these can be a massive distraction. They take you away from your operations. And so we've brought in the expertise, so that we can help move. Today, we're going to learn how to turn that financial stress that you might be experiencing into a financial strength. So financial stress into financial strength. And you're going to do this by taking control of both your personal and your business debt. And you're also going to build budgets that support long-term success. And this is really, really key and important. So to guide us through these critical financial maneuvers, we are delighted to welcome back our speaker, Kenneth Muhammad, the Director of Counseling for ACCC. And before I introduce Kenneth, I just want to give a shameless plug about USBC. Now, we are the national voice of Black business, and we provide committed, visionary leadership and advocacy in the realization of economic empowerment. And we do this through the creation of resources and initiatives just like this partnership with ACCC. We support a network of Black American chambers of commerce and business organizations in their work of developing and growing Black enterprises. So if you're interested in expanding your membership, be sure to scan this QR code to learn more, and we'll share more information about that here later. But I want to introduce our very special guest here today. Just back off the road, came in and wanted to make sure that he delivered this very critical information to you all. Kenneth Muhammad, he's been an incredible resource to the ACCC since 2007. Now, he manages and trains the entire counseling center staff, and his ability to connect smart financial principles with real-world success comes from his deeply rooted background in finance. So this is really key because he's gonna demonstrate all that he's learned. Now, as a graduate of Boston College's Carroll School of Management, Kenneth previously worked as a controller for a mutual fund compliance firm, spent time as a mortgage broker and a lender. Now, this professional history means he doesn't just understand credit from the counseling perspective, he understands exactly what lenders look for and how to structure your finances for maximum advantage. So today, Kenneth is going to walk us through the practical steps to create a budget that fuels growth for your small business and for you personally. And it's also going to help that you ensure that you're building the kind of credit profile needed to qualify for future funding with confidence. So I'm going to relinquish my screen here in a second. In the meantime, I encourage you all, we're going to open up the chat, drop your name, business name, or chamber name in the chat so that we can make sure to acknowledge you and then also to give you credit for attending today. Ladies and gentlemen, please join me in welcoming back Kenneth Muhammad. Mr. Muhammad.
Thank you very much, Phil, and I really appreciate the introduction. That was great. And thank you guys for the time you're giving me today, just to go over some information that we cover with our clients each and every day. They do call in a lot of times as the individual, but a lot of them are business owners. And what we try to do is help them with both the business and the personal side, and at least give them information, if not help them take action. So again, thank you for the intro, Phil. So starting off today, I'm going to share my screen. What we're going to cover is we are going to cover budgeting and credit solutions. And we're doing this specifically for small businesses, and we're going to talk a little bit about what creditors are looking for when you talk with them or when you go to them for financing or to get capital. So my information is listed here on the screen. Again, I'm the director of counseling. I also work on the back end side for the client management side. So even when we have counselors or client service reps who get business individuals on the phone, what they'll do a lot of times is talk with me, give me information about what they're dealing with, and then we try to create programs that would help them. So today we're going to talk about budgeting for entrepreneurs, saving and budget basics, protecting and building credit, tips, resources, and tools, and of course, questions and answers. And you can ask questions through the chat. Personally, I don't mind if you interrupt. I do like questions as soon as we're actually talking or when we're talking about a certain topic. I just think it's relevant at that time, and I do think it helps others as well versus holding it to the end. But again, it's your choice. So starting off, why budgeting matters. It helps keeps your cash flows in check, number one. Number two, it helps you separate your business from your personal finances. And we're going to talk in a little bit why that's important. And it also helps with preventing over reliance on credit cards or credit in general. And it's also good for preparing paperwork, taxes, or any type of financial statements you might need. And of course, when you're budgeting, you do develop good financial habits, and those habits tend to stick with you throughout the life of the business. And it does help the business succeed. And it also sets a precedence for those who are working for you when they see that you're diligent about keeping records as well as sticking to a budget. So, the powers of cash flow, right? So, as small businesses, all of you know that it's very important how you track your income, how you track your expenses, looking out for seasonal ups and downs, and to prepare for slow months. So, with cash flow being the lifeblood of any small business, it's not just about what you earn and what you pay out. It also matters when the money is coming in and then when the money is going out. That will tell you often if you have to use credit to float the business at a certain point in time. And again, that also goes for seasonal up and downs. I worked with a business once that only made money 1 month out of the year, and that was in December. They were a small kind of retail boutique shop, and they were able to budget for the year, use credit to float themselves for the year, and then once they made all the money back in December, they would pay off all their loans and then start it all over again the next year. But again, they had to know what was happening. They had to be able to show the bank what was going on in order for the bank to give them that line of credit and to float them for that year, which we're going to talk about in a little bit. But again, that's the power of cash flow, and that's also the power of budgeting. So, some of the basics you want to understand is that every dollar has a specific job, right? So, when money is coming in, and let's say you even pay off all your bills for the month, what you have left over is not simply extra that can just be spent. Every dollar has a job. It has a job that goes towards building the company for the future. And it also has a job where you might have excess 1 month, but that needs to be put to the side for a month where you don't have excess. So when you're budgeting, it's very important that you try to stick to the 50-30-20 rule that we use, which is 50% for essentials, 30% for growth and flexibility. And it doesn't have to be 20% for debt and repayment. But again, once your essentials and your growth is really covered, you want to put the rest away for savings. And of course, the essentials in my mind does include debt repayment. So I don't really include that in the 20 all the time. But again, the 50% is what you need to keep the business going. And that includes making sure your debt gets paid on a monthly basis. So we talked, I think, last week or a couple weeks ago on what we recommend for savings. And just like for an individual, 3 to 6 months of business expenses, just like in your personal life, it should be 3 to 6 months of your living expenses. That way, if there's an emergency, equipment goes down, any unforeseen issues, you should be able to float the business or even pay for those emergencies when it happens and keep the business going without having to worry about taking any type of expensive loans or dipping into your credit or savings, excuse me, your credit or any type of financing that's going to cost you money. You want to be able to dip into your savings to handle that issue and then build your savings back, so that, again, you can handle any issues moving forward. So it also protects against sudden dips in revenue. And again, it reduces the need for high interest debt. So why credit matters for small business? It impacts your ability to get loans. It impacts the interest rate of the loans that you do get. And it also can affect your vendor and landlord relationships. So when it comes to credit and when it comes to getting a loan, they're going to look to see what other debt you have out there, and that debt is really going to determine what they're going to allow as far as issuing you new debt and as far as the interest rate. So the more debt you have out there or debt that they don't see being paid down, they're going to consider you a higher risk and end up probably issuing you a higher interest rate or attaching a higher interest rate to any type of financing that you do get. And of course, landlords and vendors, they do want to see um, that you have not just credit per se, but that you have your budgeting in order. Most banks and most lenders that we know of, they actually want to see your inflows and your outflows. So if you are working with a certain vendor, they might not necessarily look at your credit score, but they will look at how the money is coming in, how it's getting paid out, and they want to see that it's being done strategically, number one, and number two, that it's consistent. And of course, good credit equals flexibility and growth. As long as you have good credit, you're going to have lenders who are willing to take a risk and give you financing, and not just give you financing, but do it so that it's affordable. So, as far as personal and business credit is concerned, there's a few differences. So, lenders do look at both. Okay. So, if you do have a business, even if you have an LLC or a corporation and it's a small business, they're going to look at the business credit, but they're also going to look at your credit. And they're going to look at things like vendor trade lines. They're going to look at any personal credit cards, and they're also going to look at any outstanding loans that you have. Um, Personally, not just for the business. So when you're starting out, most small businesses, as you all know, they use personal credit to kind of get established, and it will actually create a good credit score for you. So when you do start your business, it's going to be a lot easier to get business credit. So how is credit calculated or how is it scored? So number one in my book is payment history. Payment history and credit utilization. If you Google the information, you're probably going to get this breakdown. So I always give clients or anyone attending a webinar this breakdown because this is what you will see. But I would say credit history, credit utilization is probably about 90% of what your score is going to be. If you're paying anything on time or you're paying everything on time, excuse me, you're pretty much going to have a decent score. And in your credit utilization, as long as you're not maxed out and holding maxed out debt for a long period of time, you should be fine. So paying everything on time and then not carrying maxed out unsecured debt for a long period of time, you should have a pretty decent score. Length of history, I have not seen um, too many individuals have bad credit just because they had a short credit file. Meaning, let's say you opened up your first credit card a year ago. I still see clients who've had a 700 FICO score, even though they've only been in the game for a year. So I don't see that too often. Credit mix is very important because the credit card companies, lenders, especially if you're looking for a line of credit, they don't consider anything with collateral as really a risky or a credit determining factor, right? So if you have a car loan and you have a mortgage, they know that if you don't pay those things, and you know that if you don't pay those things, they can foreclose on the home and take it back. And they can also repossess a vehicle or even certain equipment and take those things back. So I see that having good unsecured debt, um, credit history, credit usage, as well as low credit utilization on unsecured debt is really what creditors are looking for, because that, again, that's what the real risk is, right? If you don't pay unsecured debt, there's no collateral attached for them to come, take it back and try and, recoup some of the money that they've invested in you. So usually if unsecured debt's not paid, they usually lose out unless they come after you, which is very expensive for them to do so. And new inquiries, which is 10%, again, if you're shopping around for new equipment, new vehicle, you want to do all your shopping and all your credit pulls usually within the first week to 2 weeks. By theory, a lot of people say that within 30 days you should be fine, because the credit bureaus will know that you're actually searching or you're shopping around for the best rate. So do it within the first week. That's the best rule of thumb. But again, I've never seen someone go from, let's say, a 750 FICO score down to 500s just because they had too many credit pulls. So again, payment history, credit utilization is really, in my book, the most important. So the cost of making minimum payments. So paying only the minimums will keep you in debt for years, and it's very expensive. So the interest cost adds up very quickly, and your goal as a business should be to pay extra. And by paying extra, it will allow you to get financing down the line. So the company that I told you about, that was a retail organization or a retail company located in a mall, every month of the year they were taking a slight loss, right? So it wasn't like tens of thousands of dollars, but they could go 5,000 in the hole, 2,000 in the hole. And then at the end of the year, when Christmas came, of course everyone's Christmas shopping. That's why they call it Black Friday. It brings the businesses back out of the red into the black. And that's when he would make all his money. And instead of just making minimum payments on the debt, he would pay off all the debt. And what that would allow is the bank to say, or feel comfortable about saying, hey, guess what? We're willing to do this for the next year, and then the next year, and the next year. So most retail companies operate this way, and they'll never pay whatever the minimum payment is. They want to pay off the debt at the end of the year. And that's pretty good advice for any small business. If you're using credit to float you throughout the year, it's not bad. Million, billion-dollar organizations do the same thing. However, usually towards the end of the year, or at some point during the year, whatever your big months are as far as revenue, that's when you pay off all the debt. So then you can go through that cycle, and keep the business not only sustainable but also growing, right? So um, again, that should be your plan. Anything over a year, or if you don't see yourself paying off the debt in a reasonable amount of time, then you definitely want to take a look at your books, because again, debt is really just to kind of float the business until you have some good months, right? Landscapers are not doing too much landscaping in the winter. And if you're a plow company, you're not plowing snow too much in the summer. So most businesses, and banks know this, right? So banks know that you're going to have your slow months, you're going to have your busy months. It's up to you to put this information on paper to show them when your busy months are, when your slow months are, so they know exactly what to expect. They know when the loan can be paid, and at least they know you have a plan. Even though things don't always work as they do on paper, but create that pro forma where the banks know that when your money's coming in and when your bills are going to get paid. The impact of making minimum payments. So here's an example, right? Someone buys a new commercial blender, you open up a juice shop, you buy one of those big $2,000 blenders for smoothies. So long term, bear with me, I apologize. So a long term loan, you're looking at $60 a month. Let's say 58 months to pay off. The interest you're going to pay is about 1,400 on a $2,000 loan. And when I say long term, meaning you don't see yourself paying it off within the year. 58 months, 2 months shy of 5 years. You want to be able to budget getting that loan paid off. I say within a year. This example is within 5 months. If you can afford to do it in 5 months, great. Just make sure that you're not going for the gusto and using money that you could be using to not get into trouble, let's say further on. Meaning, if you're going to do it in 5 months, make sure month 6, month 7, you have enough in capital to pay the bills. But when you're budgeting, when you're doing a pro forma for the bank, or when you're doing any type of kind of projection for the bank, I would do 12 months as far as your payoff is concerned. But again, you do it in 5 months, you're only paying $126 in interest versus $1,400 in interest. And of course, that 1,400, that's all, that's all your revenue. And again, you don't want to have your revenue go into the bank. And of course, if it's unsecured debt, 24% is roughly what you're going to get. There's not too many lenders out there who give really, really low interest rates. If you do have some, whether it's a credit union or maybe it's an intro period, great. The numbers will look better, but still plan on having it paid off within the year. If you can do it quicker, even better. So building personal versus business credit. So for building personal credit, number one, you want to stay on top of your credit reports, right? You get your free credit reports every year. There are three major credit bureaus: Experian, Equifax, and TransUnion. You can go right online, go right on their websites, and that you can fill out whatever information you need to, and they'll send it to you in the mail, or they'll actually allow you to view it right there online. If you see anything that's inaccurate, dispute it right away. Usually, just by disputing it, it's going to come off until some background work is done to see exactly what's going on. If it is legit, it will come back. If you don't have your paperwork and you dispute something, and the company that you're disputing against has their paperwork, chances are, if they show that paperwork to the bureaus, it will come back. So make sure you're keeping records. And again, keep an eye on the credit report so you can dispute as soon as possible. If you're past due on any accounts, definitely catch them up. That's probably when you want to give American Consumer Credit Counseling a call. Not severely past due, but if you're falling a month or two past due, what we can do, even with business accounts, is help reduce the interest rates and payments. Just by joining the debt management program that we have here, some creditors will return the accounts back to current immediately, which will actually help your credit immediately. Again, a credit trade item, or line item, as you call it, going from delinquent, 30 or 60 days back to current. It's kind of the best of both worlds. You don't have to pay the large amount that's due, and credit wise, it's going to put your score back to where it should be, or at least prevent you from going delinquent, and then get you back into the cycle of being current again. And of course, set up payment reminders. With personal credit, you're going to be able to either set up on, monthly payments, and where they'll take it directly out of your account. I tend not to do that. That way, if depending on how your bills fluctuate, you can actually pay it when you need to, but set it up in your calendar so that you get a reminder for it, not necessarily have the lender take the money directly from your account. And just for a heads up, a lender who does take it directly from your account will sometimes give you a lower interest rate because they know it's somewhat guaranteed if they can take it from your account. But when it comes to personal credit and credit cards, I don't see that too much. The interest rate's going to be the same whether you pay it or whether you set up on-time payments, or as they call it, or just monthly payments. So for business credit, you register your LLC, E&I, and you'll be able to create a profile, a credit file. And what you can do is you can open credit cards in the name of the business. You can also open up bank accounts in the name of the business. But again, it's going to heavily rely on your credit. So what you can do is, I do know small businesses, they'll go out, even if they can pay for a piece of equipment up front, they'll actually get, a net 30 or a net 60 loan, so that it shows on their business report that they've paid off, or that they have these net 30, net 60 loans that they're able to pay off easily, maybe even before they hit 30 days or 60 days. And that looks really good to have those trade lines get paid off really quickly. So instead of paying for something in full, even if you have the money, you might want to get a net 30 so that it does show up on your business credit, and of course, pay your bills on time. There's one thing that you can do if you have no credit at all, especially on the personal side. There's something called a secured credit card that you can get. A secured credit card is when you don't have credit. So if you do apply for a credit card, they're not going to give you one, or it's going to be very expensive, meaning annual fees. It will probably have a very high interest rate. So what a lot of our clients do is they'll take the minimum that you can usually use to get a secured credit card is $300. The maximum can go as high as 5,000. But remember, you're not getting a secured credit card because you want to use it. You're getting it because it's a tool to generate a score. So you get a secure, you take $300 and you go to a major bank. When I say a major bank, even whether or not you like the bank, but the major banks like Bank of America, Capital One, Chase, you give them $300. They give you a $300 credit card, and that $300 that you gave them will sit to the side and for a year because you don't have a credit profile or you don't have a credit score. So you really just secured that credit card that they gave you. So if you don't pay it, they're just going to take the 300 that you gave them and use it to offset whatever amount you charge, because again, you're not established yet. If you take that card, you don't use it, or you just use it for something very, very small, a tank of gas on a monthly basis, or maybe just buy something for $50 every month, pay it off. But you never want to go, if it's a $300 card, never want to go over 35%. Um, of the limit of that card. And usually within 3 to 4 months, you're going to have a score and you'll have a pretty decent score. So what I tell people is don't use it, pretend like you don't have it. And after a year, you'll actually get your 300 back, and they'll transition that secured card into a traditional credit card. But at this time, you'll have an actual score, right? So you'll have and I've seen clients who had no credit within 3 months have a 700 FICO score, 680 FICO score, within a few months. And the longer they held that card and didn't use it or didn't run up the balance on the card, the score kept growing as it would for anyone else holding debt that they're not using, right? So holding unsecured debt that you're not using that doesn't have a balance, that will grow your score faster probably than anything else. So again, a secured credit card is very crucial if you don't have a FICO score. You just have to make sure of one major piece. Number one, it's reported to all three major credit bureaus. So if you want to go to your local credit union, that's fine. You can do so. Just make sure they report to all three major credit bureaus. There's some secured accounts that you can get that are not reported to on the bureaus, that are just the bank will just hold it and you'll have good credit with that one bank. But if another bank pulls your credit, they will not see this credit card because it's not reporting. So again, make sure it reports to all three major credit bureaus. So again, lower your credit utilization if you have high balances on your accounts. Again, you want to keep it under 30%, 35%. I would say bare minimum, keep it under 50%. If you have $1,000 credit card, again, if you use it for a business purpose and it goes up to 1,000, be able to put 500 on it or quickly get it down to 50%. I think 50% is really the limit where I would say that's really the draw the line. Don't go over that amount limit or hold that amount for a long period of time, because it will start to affect your FICO score. So again, you can charge your credit card, to the max, and if you pay it off in a couple months, you should be fine. But if you're holding these high balances year after year after year, it will start to affect your credit score, and pretty quickly. Negotiate with your creditors. If you find yourself in a situation where you cannot pay down the debt, before you even come to a company like American Consumer Credit Counseling, you can call your creditor and say, hey, do you have a hardship program? And a lot of them might have one for a year where they'll reduce the interest rate to 0, or they'll reduce it to 1% or 5%. For a year. And during that year, do your best to pay it down as much as possible, because after a year, it's most likely going to go up back to the interest rate it was prior to them putting you on an internal plan. Authorized users. You can be an authorized user on somebody else's credit card, but your credit's being built based off of what someone else is doing. Number one, it's very hard. Number two, I don't advise people to be authorized users. So I'm not sure how easily you're going to get someone to make you an authorized user, meaning you can use that credit card as if you're that person. So there's some companies out there that will do it for very high fees, where they'll get someone off the street to allow you to be an authorized user. But I say try to stay away from that. But it is a thing. Most people, you do it for a child. If you have a kid who you're trying to build credit for, you can have them be an authorized user on one of your accounts, or you can get them a secured credit card, right? So instead of giving them, cash for their birthday, or you planned on buying them, a TV or something for their birthday. If your child is 18, get them a secured credit card. Take 300, go to one of these banks, get a card in their name, and teach them how to use credit responsibly. And as I said before, diversify your credit mix, right? So have a little something with collateral, a little something unsecured. A mix between the two should give you a pretty good credit profile. So I have had car dealers tell me that there are, kind of car credit items on your credit report, like things that car financiers look for. You have good car credit, so to speak, and you can have good kind of real estate credit. So a mix does matter, but as far as your credit, unsecured, from what I've seen, is kind of king in order to get those. The mortgage or the car, having good credit will make sure you get those things at a good interest rate, and good unsecured credit will make sure you get those items at a good interest rate. So, smart money habits, using accounting software. I think that's huge. So, QuickBooks is one. QuickBooks is very good. Um, it's good for small businesses because it supports invoicing. It also takes feeds from the bank, so information can come from the banks to QuickBooks. There's another one called Zero, and it's a cloud-based kind of more modern than QuickBooks, and they're actually using a little bit of I want to say very little bit of AI to help you stay on top of your books. And it is scalable. So as the business grows, again, that can help you with some of your um, larger expenses as they're coming onto your books. And of course, there's Wave, which is very low cost, and it's great for small businesses like mom and pop, or even just one sole proprietor. That's great ways to kind of stay on top of your bills. Pay yourself regularly. Again, you want to make sure that the banks see that there is a profit, and that that profit is going to where it should be going, which is going to you. You invest it, you use it to grow the business as well. So pay yourself through the business, and then you can reinvest it back into the business. As we discussed, monitor personal and business credit. Negotiate with your vendors. As a nonprofit, we always negotiate with our vendors. So I don't care what we're buying. We always ask, do you have a nonprofit discount? Ask banks, do you have a small business discount? Do you have discount for businesses that are, just up and coming? So always ask for some sort of discount, or negotiate with your vendors. And like I said, reinvest your profits wisely, even if it just means putting it into a savings account until you better know when your slow months are. Once you find out what you need to operate on a monthly basis. So just to pick a number out of the sky, if your business expenses every month are 10,000, one rule of thumb is after whatever is over that 10,000, all your bills are paid. Put the rest to the side for the month where you only make 8,000, and you're going to need to dip in 2,000 of your savings to pay off the 10. Some months you might make 20. Don't go out and have a great time with the extra 10. Put it to the side. Some months you might not make anything. So again, rule of thumb, just pay off, find out where that kind of equilibrium is, and anything over that, at least until you're comfortable with what's coming in and what's going out, and you've got a good gauge. And that's where, the software is good for. Once you have a good gauge on what's coming in and what's going out, then you can, take a little bit more risk when you feel like you've made enough to kind of cover you for a few months, and then you can take some and maybe buy new equipment, etc. So again, that's also, reinvesting your profits wisely. So what you're going to hear about now is these AI powered tools. So there's powered accounting, bookkeeping tools for small businesses. What the AI will do is actually identify, right? If you're not maybe the best with numbers, so if you're running a business, you're probably good at whatever you're doing in that business, right? If you start a restaurant, you're probably really good at cooking. If you're a landscaper, you're probably really good at landscaping. And bookkeeping might not be your thing. So don't be afraid to use AI powered tools that can identify when there's an issue. AI tools can say, hey, by the middle of last month, you've already made 7,000. This month, you're only at 2. We could have an issue here. You might want to get ahead of it. So these are a couple tools, Zenny, Digits, and Docked. These are some AI tools that will actually look at your books, kind of give you some insight, give you dashboards, show you where you are for the month. They'll help you pay invoices, help you pay bills, process expenses. And again, with Digits, they'll actually show you key metrics like your burn rate, your cash flow rate, your credit, your expenses. And again, you can connect your account so that it knows what your bank account balance is. It knows what your balance is on your credit cards. So it can put all of this information in one spot and tell you, hey, if you got extra money left over, you need to put it to this credit card that's charging you 24% because it's the highest out of everything you got. And it's probably going to allow your business to grow a lot faster if you can get this one account paid down. So again, use AI in your favor, and it will definitely kind of keep your time from going into all of the bookkeeping side of things and really allow you to really focus on the business itself and really doing what you want to do, which is growing your business and doing what you guys love to do, whatever that business is doing. But again, spending all your time looking at books and trying to figure out what's coming in, what's going out on a daily basis, which is important. But again, that takes up a lot of time, especially if you're a sole proprietorship or you're going to pay someone to do it, which is very expensive. So use the tools that are out there that will do it for you. And of course, resources for success. You can always call American Consumer Credit Counseling. We have budget worksheets for you. We have credit score checklists. We even have workshops, right? So if you're a business and you have employees or you have clients or whatever the case may be, just let us know and we can do some workshops for your people on whatever topics that revolve around credit and budgeting. And of course, stick with the USBC. So they have great resources, number one. And they also have access to a lot of industry news on what's going on, grants that are available. So USBC is really going to be your biggest and best resource that you have out there to really keep an eye on what's going on. And of course, together with ACCC and USBC, I think you're going to be in the right hands. We can actually take action and get interest rates dropped on business accounts as well as your personal accounts. Not all business accounts, but if your bank, usually the major banks, if they issue credit cards on the personal side and they do issue business accounts, we typically can work with those business accounts. So again, with ACCC and USBC, you should have a pretty good team to work with you. And of course, you can scan this QR code. I'll probably see if I can get it in the link. Actually, I think this might be, yeah, here we go. So here's a QR code. So if you get stuck, if you need help, this will bring you to a form fill. You fill out the form. It's going to create a file for you, and then you'll get a counselor who can reach out to you. And we're open to 11:30 p.m. Eastern. We open at 9 a.m. Eastern. So a counselor will definitely reach out to you, especially if you mentioned you're from the USBC or you do it on the USBC site as well. All right. Any questions or comments?
Wow, Kenneth, big thanks. This was a very informative presentation. Lots of good information. We do have a question that just came into the comments, and it's around getting a loan without a personal guarantee. Now,
Mhm.
this business owner, she's a small business owner and a member of USBC. She's an insurance broker. She says it's very hard for me as an insurance broker to get a loan without a personal guarantee. Do
Correct.
you advise on that? Do you have any advice on that?
I do have advice on it. So number one, it's very important, like we talked about, as far as your books are concerned. Are you able to show the bank what you're bringing in from your business? Are you able to show what your expenses are from your business? And if you are looking for a loan, what's the amount of the loan? And can you show the institution when you can pay that loan back? So if they can't answer those questions, they're not going to be too comfortable giving you a business loan, and they're going to want to attach it to you personally somehow. Because again, it's a lot easier to and I don't want to say this the wrong way. It's a lot easier to sue a person who's making income than it is a business that goes out of business, so to speak.
Mhm.
So they're going to always want to attach it to your person. So it's very, very important that you have books to show, and you want to make it easy for them. You want to be able to go in and say, "Hey, here's what my bills and my income look like over the course of a year. Here are the months I'm short. Here are the months where I make a ton of money." And then these are months where I'm kind of breaking even. Showing a bank that type of information really makes it a lot easier for them to give you financing. But without that, for them, it's pretty risky unless they know what's really coming in and going out, just to give you a loan based on that business only.
Oh, thank you for that response. And I was kind of thinking through the presentation as you were sharing, Kenneth,
Hmm.
and there's a lot of, I think emotional stress that goes into trying to find financing, running a successful business. All of that can be stressful. I wonder if you could share some behavioral financial or behavioral finance strategies, or any mindset shifts that you teach your clients to help them manage the emotional stress of debt, and then to prevent them from falling back into old debt cycles and behavior.
Right. Right. So I don't want to sound like a broken record, but a budget is going to tell you everything. Most people are stressed that we see are stressed is because they don't know what's happening. They don't know when certain things are going to happen because they don't have a budget to really see what's going on. But if you're
Mhm.
stressed because you have been doing your budgeting and you notice that there's an issue with inflows and outflows, then you're going to have to make adjustments. I would want to say there's some business career centers that have people who are definitely more knowledgeable in business than I am, that can say, "Hey, this is what you need to do in situations like this." But when the inflows or the revenue is not meeting the expenses, that's an issue. That's an issue on a business side, and that's an issue on the personal side. And at some point, some sort of action needs to be taken. Whether you work directly with a creditor or a lender, you give a company like ours a call. Um, but again, you want to find a solution that's long term. You want to find a solution as well as fix the problem. So you don't want to find a temporary solution. Like let's say a grant will kind of float you for 5 months. You don't want to kind of jump for joy because you only got 5 months and then you're kind of back in the same situation. So it's very important that you find a way or look at your books to find out where the hole is in the books, where your revenues aren't meeting your expenses, which is, again, that's the stress. When things are going great, not too many people are stressed out, right? No one really calls our company because they have so much money left over, they don't know what to do with it. It's usually a situation where they don't really know what's coming in or don't know what's going out, don't know where the holes are, and they're using credit just to float the bills throughout the month, and then the credit grows, and then they don't have a plan on how to pay off the debt. Again, don't even take out debt unless this is what it's going to cost me to pay it down in the course of a year. Of course, bigger business, you can capitalize certain things, right? So you can buy a big machine or a warehouse and you can capitalize it over 5 years or 10 years, whatever the case may be. But not too many small business owners are doing those kind of transactions.
I appreciate that. I'm thinking now because you and I just kind of covered the things that you can control, right? The budget, making sure
Right.
that you review and monitor. Now, I want to talk to you on behalf of the small businesses that are listening in about like maybe risk and insurance. And I know that you're a budgeting and credit solutions expert, but the presentation primarily focuses on savings for the unexpected, budgeting, credit. Where does risk management, uh, disability, life insurance, key man
No,
or
that's
key person insurance, how does that fit into their budget? Should they fit it in? How do you advise them on prioritizing for these protections?
right. So the first thing you want to do is you want to make sure that you have what you need to do business properly, right? So there's some organizations or some businesses where you have to have certain insurances and be bonded. That should all be part of your fixed expenses. It should never That should never be a, yeah, I don't have money for that this month. But that's where the mentorship programs come in, because there's people who have gone through it before and know exactly how you want to handle that. But again, that's a monthly expense, right? So if you're paying for your insurance, especially for your business, that's a monthly expense. Life insurance should always be, I felt, on the personal side. If your business is big enough where you want to count it as a benefit, oh, my job might give me a life insurance as a benefit, but on the personal side, that's more of your personal budget when it comes to your life insurance. So again, keep that separate from any business insurances. And again, a mentor will tell you whether or not you can probably get a discount on either one. Say, hey, guess what? The umbrella insurances right now are really big. So if you can do a personal life insurance along with a business insurance, but again, you got to split those costs to each side. One, your business stuff goes with your business, personal goes with your personal.
Okay, perfect. And this question kind of piggybacks off that, and it's about the entrepreneurs and business owners that have spouses and partners, and they have their own financial uh, dealings, and for sole proprietors or business owners, where their spouses have high personal debt. How does that typically impact the business owner and their ability to qualify for a major business loan or a line of credit?
So you're qualifying for that business loan. It depends on who you're putting on that application. So if it's you, they're most likely going to be looking at yours. If it's joint, or you're getting it on, like you were saying, on behalf of the business and the business owner, and they want to look at both business owners, and all those things are going to come into play. Um, but again, it's a tricky question. I would need a little bit more info. Meaning,
Hmm.
if that person used a lot of that debt to finance this business and the other partner didn't, then that debt, as being paid by the business, should be getting a bigger cut to pay back that debt. You see what I'm saying? So
Hmm.
a lot goes into it. Was the debt incurred from the business? Is the business making money? Is the business in the growth phase? What's going on? But as far as the bank is concerned, and again, I haven't been on the bank lending side, but they're typically going to want to see everybody involved. So
Awesome.
they're gonna want to look at everybody who's on that list of um, as far as the owners are. They're gonna want to know, and they're gonna want to have background information on both of them.
Awesome. I got a question that just popped into the Q&A. When it comes to budgeting and tracking, is it better to keep all of your receipts or wait till the end of the month to look at your bank statements on a monthly basis?
Receipts, I think, are key, because bank statements won't always give you all the information that you're looking for. So a lot of times a bank transaction will show you just the overall transaction, where a lot of times on the receipt, certain things will be itemized that you might be able to write off at tax time, that you can't write off by just showing a transaction on the bank statement. So that's where the AI tools come in. Scan receipts. They're in the phone. A lot of the AI tools will actually read, what's on the receipt and categorize it for you. So
Awesome.
it'll tell you what's been paid in taxes, what was what could be a capital expenditure versus a fixed versus a variable.
Awesome. And that question came to us from Jay Johnson McCoy. And we definitely appreciate you for putting that question into the Q&A. Jay Johnson is with Hands to Healthy, and just wanted to make sure that we gave them that shout out. Uh, Looks like in the chat we also have another. Well, I got to give you a shout out, Kenneth Kia Payne of About the Money. She's the founder and CEO of About the Money. That was a
Okay,
really great session. It was extremely informative. So
awesome,
you're definitely handing out some jewels today.
awesome. I really appreciate that, and whatever we can do, we'll do it. So
Just a couple more questions, okay, before we let you go. I know you got to get back to it,
no
but
worries.
when thinking about you mentioned advanced negotiation earlier, and I was kind of thinking on the purchasing side. But can you talk to us too about when we go out for access to capital and we want to negotiate maybe a rate or a payment reduction or the terms. What are some of the key words and phrases that we should be using when we're talking to lenders and maybe some of the points of leverage?
So that's a great question. Each lender is different. Each lender is going to have a guideline sheet, and the guidelines will tell them where they can go. So you're not going to negotiate. Um, when it comes to negotiating, you're going to be able to negotiate with vendors more than lenders. Lenders
Mm.
usually have a certain amount that they're going to get for a specific loan. The higher the loan, usually the higher the interest rate will go. But so there's not too much negotiating. What you can negotiate, or you can do on the business side, is show them your records. Say, hey, this is when our money's coming in. This is when it's going out, and it'll help you actually get financing. And you want to be able to put that loan that you're getting into those numbers so that they're comfortable seeing that you can pay for that loan and how quickly you can pay that loan off. A lot of them really, they don't mind if you don't pay it off that quickly, because again, they make more interest the longer you hold it. But the fact that you can factor that loan payment into your monthly payments every month is important. But when it comes to price, you can ask if they have any type of, if you're a nonprofit, hey, do you have any nonprofit discounts, right? Do you have any small business discounts? Of course, if you're in the military, or we're in the military, any military discounts. So you can definitely negotiate price with lender. And again, we buy big software here at my company, and we're like, hey, what is the discount for nonprofits? And we will not have a meeting without asking that question.
Mm.
Especially when we get down to pricing. Every single meeting we have, we could be working with another nonprofit, and if they're selling us something, we're still going to ask, do you have a nonprofit discount as well? So always ask it. Know the unique things about your business. Um, and be careful too, because the more unique your business is, the less the bank can predict um, how things can be paid back, because again, they don't see it a lot, right? So your books are very important. And I can even say that for my company, there are not a lot of debt management companies out there. So when it comes to financing or anything along those lines, banks are pretty wary. They don't see it a lot. Car dealerships, car loans, yeah, they see that a lot. Mortgages, they see that a lot. But unique certain business situations, they don't.
Awesome, awesome. Thank you for that. And I got one more question, and I'm going to try to get us out of here on time. But we talked about monitoring your bank account. We talked about monitoring your personal credit. Um, Talk to us more about developing a process or a monthly task or procedure to monitor your business credit. In particular, looking for fraud or inaccuracies, doing reconciliations, that type of thing.
Yeah.
Is it important to do that every day, every week, every month, or just as needed?
It depends, right? So if you're doing a lot of credit transactions, and you're doing a lot of transactions with a lot of different companies, especially online companies, I would probably get some sort of fraud protection service, so that at least you get notified anytime something is going on your credit profile. So just a notification alone, I think you'll be able to go in and handle it as soon as possible. But I don't see people, and that includes myself, who are pulling credit, weekly or even monthly. I think if you're a business, maybe every 3 to 6 months. I would say probably every 3 months, 3, 6, 9, and then for the year. Definitely personal and business every 12 months. Get a copy for the year. But again, you want to know what's out there. You can get a credit monitoring service. They're getting cheaper by the day. But a couple things. If you use any AI product that you're not too sure of, or that has not been verified, or is not commonly used, you do not want to enter personal information into any AI tool, period. And if it's a free AI tool, um, your information is what is actually paying for those sites, meaning they're taking information that you're putting in, and when other people ask questions, they will use your information to spit back out to somebody else. So if you're a certain company, you are the product, right? So
Commodity.
Yeah, absolutely, absolutely. So the information you're putting in every day to these tools, you're what's making them money. So be very, very careful of putting personal information into any AI tool. And of course, if you feel like you have been scammed or something's going on, you can go to any website, any of the credit bureau websites, and put a freeze on your credit report. The only bad news is when you do want to go get financing, you have to take those freezes off, but you can put them right back on. But again, if something has happened, dispute it, freeze it, and then go from there.
There you have it, folks. We just got a tremendously informative presentation from Kenneth Muhammad. Kenneth, I want to thank you again
Very
for your
welcome.
time and your expertise, sir.
Yeah, thank you for the platform. This is what we do all day, every day, and it's a real blessing that we get to work with the USBC. It's a great group of people, great community, and again, it's probably one of the best parts of my day or week. So, thank you.
Awesome. Awesome. Thank you. Thank you so much. And we're getting lots of good feedback in the chat as well. So it's a confirmation for us. Now, that concludes our Q&A session. And before we sign off, though, there's still some information that we want to make sure that we share. I want to briefly just highlight a few more resources and upcoming events from the U.S. Black Chambers. Please visit usblackchambers.org/webinars to register for our next session. And in fact, our next webinar is on November 13th, and this is going to focus on the impact of women-owned businesses. And this features leaders like Angela Dingle from WIP, Women Impacting Public Policy. This is going to be a really great discussion. Our director and VP, Elisa Joseph, is going to be moderating this discussion, so you don't want to miss it. And yes, men are welcome to attend. So please make sure that you register for this event and make sure that you attend as well. We've already seen a high number of registrations, and we want to make sure that you all get there. So scan that QR code or be on the lookout for more information in your email. Now, next up, do want to talk about Buy Black. We can't talk about Buy Black enough, in my opinion. Our directory and our certification program is top notch. And so if you haven't yet, please take advantage of the Buy Black platform. This is the only national certification exclusively for Black-owned businesses. And I'm real proud about this. This was developed by USBC with the support of American Express. So we've had some folks that chipped in and helped us out to ensure that we're doing our part for our community. So onboard your business to the directory to reach new customers and get access to valuable resources. So scan that QR code or visit usblackchambers.org/certification. Next up, our resource desk and office hours. This is a really cool feature for our members and for the folks in our audience. You can drop by our office every Friday virtually. Don't show up at our doorstep. Come to our office hours, and you get a chance to talk with Tiffany, myself, Buy Black folks. You never know who's going to be there. So you definitely want to tune in to that. But you get more personalized support just by joining this office hours. It takes place at Friday at 11 o'clock Eastern Standard Time. So it's a one-stop shop, and you get a chance to ask your questions. You get to discover, all the innovative resources that we have at USBC. You can look for technical assistance on lending programs as well. There's no registration required. We'll send you the information, or you can scan the QR code here, and then you can show up. And we'll send out an email before office hours as well, so you can always show up and attend. All right. Next, we got our small business news and resources and our SCORE mentorship. And this is really, really near and dear to us because we wanted to make sure that we provided mentorship to all of our entrepreneurs, whether you're large or small. We encourage you to take advantage of this. So we're proud partners with SCORE, Service Corporation of Retired Executives. So if you need answers, one-on-one answers on business planning, finance, marketing, certification, you can speak with a SCORE mentor through our program. So register today. You can secure an appointment. You can have multiple SCORE mentors if you wanted to as well. So definitely take advantage of that. All right, now this one is really, really important. This is the Verizon Small Business Digital Ready program, and we push this quite a bit because it's an underutilized resource here at USBC. And in particular, the grant funding opportunity, we have worked out with Verizon Small Business Digital Ready to give away $10,000 to 50 small businesses. And for us, it's just a quick reminder to you all about the Verizon Small Business Digital Ready program. You can sign up for free, and if you complete just 2 courses or events, you become eligible to apply for this $10,000 grant. So you unlock the grant funding just by taking a course. Some of these courses are 5 minutes in length. Some of them are 60, 61 minutes in length, but it all counts towards unlocking that grant. So the deadline to apply is fast approaching, December the 10th, and you just need to complete 2 courses or events. Make sure to apply by December the 10th. You can scan this QR code or be on the lookout too for the link in your email. So, oh yeah, there's a couple more things, and this of course is the plug for Kenneth and the great work that they're going to be doing with us in the consultations. Schedule your free consultation. This is free consultation. This is our final reminder to you. We encourage you take this first step towards empowering your financial freedom. And you schedule your free consultation with ACCC. Use this QR code as displayed here for your convenience, or be on the lookout for the link that we're going to send out. All right. And then for you all that are already in the market for access to capital and you're ready to borrow, remember USBC, we partnered with Lendistry to provide affordable loan products specifically designed for under-resourced small businesses. So this includes our community, minority and women-owned and veteran-owned firms qualify for this. So take advantage of this partnership that we have with Lendistry, and then also try out some of those tips and tricks Kenneth taught us about negotiating terms and rates where possible. So scan that QR code or be on the lookout for the link. All right, resources just keep coming. All right, Buy Black's grant list. You don't want to miss out on this opportunity. Access the Buy Black's grant list. You can find hundreds of opportunities and over $10 million in grant funding opportunities and resources that are meant to grow your business. So I encourage you all to scan that QR code and go to our website and check it out. Tiffany, how many more slides we got? They just keep popping up. All right,
I'm so sorry. This is the last one.
USBC newsletter. This is the key to everything. USBC newsletter has all the information that we have regarding our resources. You can subscribe to this, stay connected with the national voice of Black business by subscribing. Use this QR code, and then when you're ready, we know that a number of you are just kind of testing the waters with USBC, and then there's a number of you that are multi-year members with USBC, like Nandi Ganda and others. But if you haven't joined as a active member, we encourage you to consider joining USBC as an active member. If you belong to a local chamber, consider becoming a dual chamber member to get the additional benefit here at USBC. We're working extremely hard to pull together endless resources, information, and initiatives to help benefit the businesses in our community. So I encourage you all to take advantage and sign up for our newsletter. And then when you're ready, join USBC. Now, all right. Whew. Now I want to thank everyone for attending this very important webinar. We had a lot of great information that was shared. Kenneth did an excellent job in delivering the content, sharing the tips, sharing the resources, giving us the blueprint on what we needed to do. So I want to thank you again, Kenneth of ACCC. And thank you to all of our USBC members who made this possible today. And thank you all for joining our entire audience. On behalf of our president, Ron Busby Sr., our board, and our staff, I want to thank you. Please be sure to visit usblackchambers.org www.acccc.org/webinars to register for future training opportunities. Be sure to follow us on social media. Have a wonderful and financially empowering day. Thank you all.
Thank you.